Sorry for the late start. In all honesty, I wanted another coffee, so I had to go and make another coffee. But the main thing is that we are here now. So I hope everyone's had a decent weekend. I hope we're all good. And we've taken the time to plan our positions for the week ahead because obviously, as we know, things that we plan out go a lot smoother. We do the hard work over the weekend so that we don't have to during the week. We've got a little bit to go through, so it'll be a slightly longer session. So obviously for those that can't make the whole thing, go back and watch it through. There's just a few things that we're going to want to discuss and go through. So it might take a little bit longer than we are usually up for. Like normally we only go for about 20 minutes, 30 minutes. But we might have a little bit of a longer session today, just because there's quite a lot to look at. Up on the screen at the moment, obviously, we can see that we have New Zealand CAD. The New Zealand dollar took a bit of a beating last week, in all honesty, which isn't great because I'm a big fan of trading pound New Zealand short, but that hasn't really presented itself this week. But with New Zealand CAD and New Zealand dollar, to be perfectly honest, we have great opportunities because we're trading around range lows. So we can see that obviously with New Zealand CAD at the moment, we've got this area down here at 89.40. This level of support that we've used 2, 3, 4, 5, coming up for 6 times now in the recent, very recent history of the pair. Obviously, we are seeing potential movements, potential areas. So it's a zone that we need to be extremely mindful of and extremely careful of as we're obviously approaching and trading around those lows. That's not to say that we're not just going to see a little bit of range-bound activity this morning. When we go and have a look at New Zealand USD, you'll see exactly what I mean. But there's definitely the potential for this pair to just sit in a little range. It has done for quite a long time now previously. So there's absolutely no reason as to why we're expecting it to break through first thing on a Monday morning. However, we are expecting it to break through at some point. Obviously, the CAD has been immensely strong over the last 2, maybe 3 weeks, probably even longer than that actually if you were to go and look at the dollar CAD trade that we were in earlier in the year. We've actually seen quite a strong Canadian dollar for a while now. So when you couple that with the fact that New Zealand seems to have taken a little break, now obviously we have to remember also that the New Zealand dollar was also extremely strong as we were moving into the year. They've had obviously very positive coronavirus responses. But obviously we've started to see that momentum stall out ever so slightly. So with New Zealand CAD, obviously we're trapped inside of this little range at the moment, but we are anticipating a break to the downside. Let's go one more, shall we? Obviously, when we do see that pop to the downside, it puts us back inside of all this previous noise and all this previous region through here. So an almost immediate pop into kind of 88.80, that kind of area, makes a lot of sense. So we're on for a decent risk to reward straight out the bat. So wait in a couple of days if we need to get the best entry we can do. The most highly probable entry that we can get obviously doesn't make too much of a difference to us because we do have so much potential when it comes to risk to reward on the table. So we're in certainly no hurry to be jumping into positions on the pair as things stand. But like I say, a drive back down into 88.80 makes the most sense to begin with if we can navigate through that region. And there's very little to stop us from hitting like 87 or 86.50 at some point over the next week or so. It's not necessarily to say, as we obviously, that we are going to fire straight into that zone, never look back. We might well see some price stalling. We might not. It's hard to predict that at this point in time. However, what we do know and what we can predict is the fact that we are likely to see some form of reaction, some form of movement. So a push down makes a lot of sense on that. Obviously, going back to the lower time frames, if we were to break back above, say, the 90 whole number, then at that point we would have to consider whether or not looking at the short side is the most logical thing, or whether we just take the long up to 91. Both obviously present us with good opportunities, so there's options for us. We just need to exercise a little bit of caution and a little bit of patience, allowing things to play out this week. Obviously, we do also have some fundamentals surrounding the US dollar, which will likely spill over into other currencies as well. If we take a look at New Zealand USD, obviously we was looking at this last week and the potential that we had outside of this little range situation. Now with this pair, unlike New Zealand CAD, we have to be very mindful of this first initial drop, just because it would be very... We could quite easily get through this support region at 71.50. However, we have that immediate support down here at the lows that we can see at 71 whole number, and it's that area that is going to be the most problematic for us should we see anywhere that we're going to get some price stalling. So we need to be extremely mindful, obviously, around that situation and around that area at 71. So it gives us quite a small initial first target. That doesn't mean to say that that's going to be the way all the way through. Obviously, we might well see price just fire straight through that area, not look back. It would make life extremely simple and extremely easy for us, but it doesn't always go like that, unfortunately. Sometimes we do see some odd behavior in the markets that we just aren't really prepared or ready for. So we do need to just be a little bit mindful, not go running into things, not go rushing into things, allowing things to just play their course ever so slightly. But yeah, with New Zealand USD, at the bottom of this region, at the bottom of this 71.50 region, which looks all very, very probable of coming into play, and obviously seeing that break below. So at that region, obviously we should have the opportunity then to see that drop to the downside. We shall wait it out. We shall see what happens, see how things progress. But as things stand, obviously, price action certainly kind of looks favourable for that downside position into 71 to begin with, and then obviously from there we see what happens. The beauty of this position and this pair in particular is the fact that we are presented with range trade opportunities. What we're seeing and what we do have at the moment on the pair is obviously the opportunity that should we reject away, potentially see a push back up to around the 71.80 region. We're probably going to have enough about us to be able to take the long position back up and range trade this back to range high, or at least look to close the position out when we get to kind of around about 72.20, and where we could potentially see a fresh swing form. But as things stand, obviously we do have the start of this little trend line coming into play, that obviously we could be very, very mindful of, looking for that little squeeze into the downside, that pop below 71.50. This is one of my favourite kind of looking positions for the week looks the most probable at this point in time. We cover the rest of the New Zealand pairs just quickly. New Zealand Swiss is one that I wanted to look at. Obviously, last night we saw quite a large gap, certainly for the pair anyway. I know it's only like 15-20 pips, but for the pair that's quite a big gap. We've seen a fresh swing coming this morning, and we're just breaking the lows of the previous swing. I'm ignoring the gap for now and just focusing on this swing that we've seen at the moment. Obviously, we've had a higher high. If we can break the lows though, then it's starting to look a little bit more promising. What we would actually want to then see is just a push down. I don't even want to break the lows to be able to take an entry if we can get a new swing. If we can see that push down, that drive back up into kind of around about the lows of this region. So if we just run a little ray very quickly through, I'm probably just going to bring it up a little bit higher. Sit them around about the 45 or the 40 region. If we can get a retest of that zone and that area, then obviously we would be very, very well placed to take a decent run at the potential support that we have in this region. And obviously gain the best possible entry. If that doesn't happen and we do just see a straight drop below the lows, anything below the 6630 region, so below the majority of the bodies here, the majority of the noise, then obviously that would potentially lead us into a possible early entry. For those a little bit risk averse, just wait for 6620 to go. For the sake of 10 to 20 pips, you have to ask yourself whether it's worth it. In a situation like this, I personally feel that the gamble is worth it, just because obviously if we can get an entry from 40, it makes our risk to reward profile down to 65-60 a lot better. Our first target is always going to have to be down here, considering there's a support that we've seen recently at this area. So with a first target of 65-60, 65-50, depending on how you want to play it, we need to be a little bit mindful of that risk to reward potential. So if we can get that extra 10, that extra 20 pips, it's going to make quite a difference, because our stop loss isn't going to need to be massive. For instance, if we get involved in a position, let's just say hypothetically, from this 40 region, let's say that we do get an entry at 40, we're only going to need a little over, you could probably get away with a 25 pip stop loss. And therefore, obviously pushing back down to that 50 region, that 60 region, you've got a 3-1. If obviously we don't manage to get our entry until the 20 region, then we've only got ourselves a 60 pip target, but we're also going to need around about a 40 pip stop loss, which is something that we don't want. You could probably get away with around about 30 if you were to use the support region as your potential stop area. With that in mind, then obviously we do just need to be mindful when it comes to risk to reward. If we can get through 65-60, it's no issue, because we're all the way down to 64, 64.50, and at that point in time, obviously the risk to reward profile means nothing, because we're about 200 pips up. So we don't really care at that point. But it's just getting through that first initial drop at 65-60, 65-50, that kind of area that is going to be problematic for us. That's the only sticking point that I have when it comes to this New Zealand Swiss pair. Other than obviously the fact that we've got Swiss fundamentals and the Swiss franc isn't particularly strong within itself. With that said, it has definitely proven me wrong this morning though. But, like I say, we have options when it comes to this New Zealand dollar this week in general. Aussie yen is a pair that I want to have a quick look at. Obviously, last night we gapped quite significantly. We were targeting a pop out of the lows here, at the lows at 84. That obviously happened last night. Quite a significant gap on the pair, really and truly. We're starting to come up. I do anticipate that we do still go up as far as kind of 84.20, 84.30 this morning, before potentially seeing that drop continue back to the downside. That is purely just because I would prefer if we saw this gap close fully. That doesn't seem to have happened. We're seeming to not be able to get through this little double bar formation that we've got down here. Therefore, we're starting to see a little bit of support prop itself up around this 83.80 region. If obviously we get below 83.80, then absolutely fine. We will just flip and take the short position down. No point getting involved looking for that potential long or waiting for it. But I would much prefer to see a push back up to establish that gap closure kind of around about 84.30, 84.20. At least somewhere around that region before looking for a potential push to the downside. It's not a million miles away of being achieved. Therefore, waiting it out just for a little bit longer makes a lot of sense. Failing that, obviously, like I say, we can just look to take a position should the support fail to hold. And we will continue to ride that down into 82 and the lows that we have seen down here previously. I think when we come out to the slightly higher time frames, we can see now that the pair looks to have stalled in its price. We've had that last ditch price push, but throughout obviously last week and certainly the beginning of this week, we've started to see that momentum drop out ever so slightly. If we were to see a lower high be made, a higher low be made even, obviously this area would be a good place to see it. This is part of the reason that I would want to see that retest of that 30 level and see a complete rollover from there before wanting to take a position. Just because as things stand at the moment, obviously this region around this 80 area, 83.80, we come back down into the lower time frames, we can see is where we are starting to see a little bit of support found, but is also very much a resistance region that we have used previously. Therefore, it would be imperative that we got through that region. I don't want to see that area act as the potential for a higher low before pushing and creating fresh highs also. Should we get above 84.50, then obviously we will just scrap the short potential, that short bias, and just turn our full attention down to the lows. That would make the most sense for us at that point in time, I believe. So we will wait that out and see what happens with regards to that. Regarding the Australian dollar at the moment, obviously it has been on a bit of a tear. It has been pretty strong. There's a few pairs that we can go back and look at. If we look, for instance, at Euro Oz last week was giving ourselves quite a lot of potential around this 53.50 region. Would actually probably quite like for the 53.30 region to be taken out before taking a position, if I'm honest. If we just come down through the time frames just to get below these previous lows. But again, that's something that we need to see. This is obviously the Australian dollar that had weakened off over the weekend. Not necessarily the strength coming back into the yen. So it's just something I think at this point in time to be a little bit mindful of. Certainly as we're pushing, but as we stand, obviously Euro Oz below 53.30 makes a lot of sense. Potentially, if we start, now that we're starting to get above this 54 region, If we do break above and get a close somewhere around about 54.20, it might be prudent for us to start thinking about potential long positions with the pair. Obviously, with such a large target at 56, we can put in place a decent stop loss or just take a very, very low risk position using the new swing, just like 0.5% or even 0.25%. The fact of the matter is that we would still have a massive risk to reward on the position should we get through there. Go up to 56, for instance, as a profit target. We can have a 40 pip stop loss, giving ourselves a 4-1. If we do get the opportunity to have a slightly tighter stop loss, then obviously we have a potential 6-1. You take that at 0.5% or even 0.25%, you've still got a decent position on your hands. Not a bad way to start the week. So that's just something to be very mindful of when it comes to the pair. Euro Oz does definitely have potential. I wouldn't mind just having a look very quickly at Pound Oz also. Pound Oz, obviously, we were looking at last week. We had closed below after making this new little swing situation. And then obviously we've gapped at the weekend, driving ourselves back to the upside. But again, that pop back below makes a lot of sense to us. I mean, there's two sides to this. We can either await the push back below 79.20 and just take that position. Or obviously what we can do is wait for 78.50 to be taken out, depending on obviously your risk tolerance and how you feel about it. For me personally, I'll probably look to just take a position once 79.20 is taken out and we get a decent close below. Decent close below that support region, I'll probably look to take it. Again though, looking towards the upside, if 79.80 is taken out, then obviously we will look to just trade it up. We do have obviously this resistance area at 80.20 to contend with, but after that we are off up to 81.20. Therefore, there's a good 100 odd pips in that position for us should it present itself. So it's just one, again, to be mindful of as things stand. The last one I will just want to run through before we continue with usual progress is EuroCAD. Obviously, EuroCAD is a position that we have been heavily involved in since 50.50 was taken out and that previous support region. We've come back down. We're now chilling around 48.80, 49, that kind of region. My stop loss on the pair currently is at 49.20. More than happy at that point to just accept my profit and take it off the table. I do also have another order in play at 48. I think should 49.20 get taken out, then obviously we could potentially see quite a big push for the euro back to the upside. There is euro PMI or CPI data this week. Which is it? I think it's PMI data on Wednesday, I believe. So Wednesday morning, I think we've got quite a lot of Euro PMI data that we do need obviously to be very, very mindful of. The last thing we want there is to get caught up in that. So if we can see some positive data come out for the Euro, I would very much expect that to start catalysing the pair off back towards the 150 region. Definitely catapult us back above 149 at the very least. So obviously something to be very, very mindful of. If obviously that data is weak, we are obviously in a great position at the moment, and that should continue us back down to that 146 target that we have in play on the pair. So again, it's just a bit of a waiting game with Euro CAD, but we have our next entry at 148. That's a pretty clear entry for us now. So we will just mind our business, let it do its thing. Stop losses at 49.20, that's absolutely fine. Or we take another entry at 48. Dollar CAD. The Canadian dollar, as we said, obviously been very, very strong. We started to first look at this pair around about 129 back in February. And obviously we've seen it come down. We were always targeting this 124.50 region. We hit that, saw the sell-off. Consolidation starting to break back into that trending market again. We broke and made fresh lows. As things stand at the moment, I am not sold on either direction of the pair, but obviously that 124.50 region was key for us previously, and there is no reason why it wouldn't be again. So with regards to this area as things stand at the moment, I think in and around that 115 region is just something that we want to be very, very mindful of. There's certainly potential there for us to see a breakthrough 24.50, and if obviously that does happen, then we are off to the races. It will be extremely profitable for us if we were to get through that region, at least 200 pips down into 23.60, but in actual fact that wouldn't be where we would be stopping. We'd actually be looking for price to come down into 122.50. So it would be quite a significant fall and a significant drop should it present itself to us. So it's one to be very mindful of. Regarding long positions at the moment, I wasn't actually planning on looking at long positions until 126 was taken out. Now, that's changing ever so slightly just because we're starting to see this little area of resistance that has formed at 125.20. And it kind of makes sense that if we were to get through that region, that we might actually potentially see the opportunity to take a position. So as things stand at the moment, that's an area that I would be very, very mindful of and very intrigued by. And obviously the potential to get through that region would obviously give ourselves the potential at least to drive price or to ride price back up to that 126 region as a slightly earlier entry. We shall wait and see though. Definitely have alert set at 124.50. Also have now got an alert set at 25.20. So we shall see where price goes from there. It's also worth noting that we do now have what looks to be this head and shoulders formation. Yes, typically our neckline is probably going to be through here somewhere. We would want to just put a little trend line through that region and a breakthrough of that. Now, given the fact that that price point for us at the moment is around 80, and at 70 we have the previous support that we're just looking to get through anyway, I would still be very much waiting for that 70 region to go. But it's just nice to see little price structures giving ourselves that heads up also. The flip side of it is that we also have this inverted head and shoulders pattern using this 25-20 region as that area also. So we do have potentials either side of this pair at the moment, and price structures aren't giving ourselves a clear indication either. So we just need to wait and see. As things stand though, definitely be looking above the 20 region and below the 70 region, 24.70, 25.20. Euro USD. Euro dollar obviously is something that we've been keeping an eye on for quite a long time. We've been very cautious and we've been trading this pair in and out for a little while. As things stand, I still very much lean towards the potential for the downside and into that 116.20 region. back down here at the lows. That's going to drive me insane now I've moved the chart. Let's just snap that back. So I think there is definitely a lot of potential in the pair as things stand. 118.80. Once again, this morning, I know that we broke down towards that 70 region overnight. But that little level and that little area at the moment at 1880 is without a doubt the key area we need to get through. We need to get through that level. If we can see that and we do get through that area, then obviously from there we've got a ready-made short position. We do need to be a little bit mindful around the 118 whole number and 118.20, that area. But by that point, obviously, we'll be nicely in profit anyway. We just need to be a little bit careful. But getting through that region, getting through and below 1880, obviously, as things stand at the moment, seems to be the key for us. So we just need to kind of wait things out a little bit, see how things progress. Obviously, if we can get into that area, if we can get below that 1880 level, then obviously we should be pretty much off to the races. It's just a case of seeing price finally get below and get through that level that seems to be the problematic area for us at the moment. But with anything, the more times we retest it, the more times we revisit that area, the more obviously confidence that it does provide us with. So we will just have to ride things out, see how things progress, and obviously go from there. There are a couple of others that I just want to run through very quickly also. So I do just want to visit pound CAD. There's not a huge amount of pound fundamentals at this week. Just a couple of speeches from the Bank of England following last week. But that doesn't mean that we don't have potential positions. Obviously, with the CAD potentially gaining strength against the euro, the potential CAD strength against the New Zealand dollar is something that I just want to visit with the pound. With the pound at the moment, obviously, what we are starting to see is that break back to the downside. We saw it just now when we were looking at pound Oz, starting to see that we're still around these key levels. So at 79.20, if we were to drop through that, then obviously we have that potential short. With pound CAD as things stand at the moment, obviously we have the potential to drive back into 73.40, 73.50 and see that drop below. If obviously we were to see the drop below 73, then that in itself would probably be enough to want to enter a position to continue down into that 72 region and that previous support that we've seen at 72. I think that at the moment has huge potential of being found and being hit. We just need to see a little bit of strength come into the Canadian dollar this morning, as obviously we are progressing through the day. But should we see that, then obviously we have massive potential. Again, back above the highs at 74 and getting through that 74 region, we would definitely have a position to take up to 75, and I would very much anticipate that if we were to start to see that upwards direction come into the pound and that buying pressure, not just in this currency, but across the board, we would be very, very likely to see drives back to the upside and inside of this previous range. There's very little reason I see that we don't start to revisit 176 at some point with that pair, should it come into play. Where else did I want to look? I wanted to take a look at Aussie CAD. Aussie CAD is obviously something that we were keeping an eye on. We were watching for, and we, I think, ended up getting our entry on. If I'm not mistaken, our planned position has come into play. Let me just have a look. Yep. We had obviously a position set at 96.90. That would have now come into play and be travelling on its way into a decent profit, with our target set down at 94.50. So obviously, as things stand, we let that continue to do its thing. I do anticipate coming back up at some point, although we've seen a much nicer gap closure on the pair. If obviously the Canadian dollar comes into play and does strengthen up, shorts below 96, we can add to our position. Look to continue to ride that very much to the downside. Breaks back above 69.80, turn attentions to the upside. We probably see the CAD weaken off, but with the fact that we are looking obviously at Aussie yen, that does have potential, as does the Euro Oz short and the Pound Oz shorts that we were just talking about and running through also. So there's potential there for us should it come into play. I also just want to take one last look at a pound pair and pound Swiss. It's a currency pair that's a bit of it's slept on a little bit. It moves just as fast sometimes as the other pound pairs, but it moves very well also. So once it starts to get in its groove, once it gets into the zone, it moves very, very well. Obviously, there is Swiss rate decision and monetary policy, which, given the fact that they've extended their lockdown, I'm not expecting to be particularly positive. But there may be the early opportunity to take a short, maybe below this 50 region actually. Below the previous support that we're starting to see at this region. If we just run a level through, I just want to see how many times or whether this area is held up before. Okay, so a little bit lower at the 20 region we've seen it. So we've seen it act as support previously, quite significantly actually. Resistance, resistance. So we're at a decent level. We're at a relatively we're at a relatively strong level as look at that. This situation through here. Yeah, do you know what? I think below 28.50 could potentially have a short position here, setting up quite nicely. We've seen obviously lower low, lower high, lower low. Where would our high come in? We might see a new high swing into 75. So as things stand, a 30 pip stop loss would be necessary. Let's just put a stop loss at 80. So the risk to reward's not really there for our first target. We would perhaps want to see just that new swing come into play. I know that if obviously we get through this region, then it's open season and our risk to reward massively increases. Depends whether or not we are content with that gamble. I myself might potentially take this position on a low risk. The potential for a 9 to 1, even at 0.5%, is a decent return. So that is definitely something that is of interest this morning for sure. So yeah, the potential for pound Swiss below 128.50 is obviously very, very strong also. But I appreciate I've kept a lot of you longer than we would normally have these little sessions for. So thank you everyone that has come and attended or obviously watched back. Like I say, hope everyone has a decent day, whatever you're up to. Be safe, be sensible. With regards to fundamentals, there's not really anything out this morning. There is a speech from Jerome Powell, the US chair, at around lunchtime. That obviously does command a little bit of respect and do need to be a little bit mindful of. But apart from that, it's pretty smooth sailing. We should just see the technicals play out today, which would be extremely nice. Have a good day, whatever you're up to, and I will catch you in a bit.